Hi there, welcome to kneppyinvests. It is October 5 when I am recording this video, which means the very first September quarter Appendix 4C of 5B will be released any day now. I do expect one or two of these reports to be released during the rest of this trading week. And hopefully I will complete as many of these June quarter report videos that I can before the first September quarter report is released. I have 3 more to do after this, 2 group videos and 1 standalone video. And I wanted to do this video on these 3 companies because even though this was supposed to be the last video I was going to do in this series, I just wanted to touch upon these 3 companies because these were the last 3 companies that failed to make it in my standalone video series and are now lumped together in a group video. There are numerous reasons why I decided to do a group video on these companies, not a standalone video, and I'll touch upon those reasons when I talk about these companies individually. But let's get stuck into it, and the first company we're going to look at today is Gefen Technologies. I won't hold it against you if you've never heard of Gefen Technologies. This is a recent IPO on the ASX. In fact, it listed on the 21st of July 2021, so I don't know much about this company. However, what I do know interests me enough that I want to do a little bit more research on Gefen Technologies. It is a cloud-based SaaS company launching in 2014. They offer a powerful tech-driven marketplace that empowers agents. So their platform can be deployed in distributed agent networks such as insurance, real estate, and financial advisors. So that's all I know about Gefen Technologies. I will have to dig a little bit more deeper, but they have a current market cap of $102 million. That's a share price of 79 cents. Now, the share price has been quite volatile over the past few trading days, and we'll look at that chart and we can see that volatility. They actually are based out of Israel. That's something else. I'm not sure why I have focused on quite a few Israel-based companies. For some reason, these Israel-based companies want to list on the ASX. I have nothing against them doing that. I'd like to know the reason why, however. Now, the June quarter report was the first Appendix 4C this company did release. So we have a sample size of 1. The sample size of 1 tells us nothing about the company. I do prefer at least 8 quarters of history before I know whether there's any discernible trend in receipts or anything like that. But when we do look at the June quarter results, receipts to customers $2.6 million US, and they were operational cash flow positive by $108,000, which is positive for a cloud-based SaaS solution company. A lot of these SaaS solution companies or cloud-based SaaS companies are not cash flow positive. In fact, they're cash flow negative. So that is one good thing Gefen Technologies has against some of these other companies. Receipts to customers for the half year, $4.8 million. They were operational cash flow negative for the half year by only $600,000. And they only have $933,000 of cash on hand when we look at the June quarter report. Don't know what happened to all the cash they raised in the IPO. Maybe it went to something else. And they have $545,000 of debt. So we can't really look at the financial history, cash receipts history for Gefen because they've only had 1 quarter of receipts. But we can look at some other stuff, particularly stuff they mentioned in their Appendix 4C and presentations they have released to the market since they listed on the 21st of July. In one of their reports or their presentations, Gefen Technologies did a peer comparison on their financial state to 4 other companies on the ASX, including Big Tin Can, Nitro, Airtasker, and Fineos. I don't know a lot about Fineos, so I won't relate them, Gefen, to Fineos. But when you do look or compare Gefen to Big Tin Can, Nitro, and Airtasker, there is some possible value here. Unfortunately, we only have a few months of history for Gefen Technologies, only 1 quarter of history, financial history that is. So this comparison, I think, is a little bit too early. I think the market wants some proof that Gefen Technologies is growing. When you look at the market cap or enterprise value of Gefen compared to Big Tin Can and Nitro in particular, there is a bit of discrepancy between the two when you look at the revenue. So the revenue of Gefen is $16.4 million, while for Big Tin Can and Nitro, it's just above 40 million, around about 45 million. So Big Tin Can and Nitro's revenue not quite triple that of Gefen. Enterprise value to revenue, Big Tin Can and Nitro between 10 and 15, while for Gefen it is 5. And when you look at the revenue growth, which is something I do look at, Gefen Technologies does compare favorably to Big Tin Can and Nitro, and Gefen Technologies is the only profitable one out of those 3 companies. So there is some positive things about Gefen Technologies when you compare them to some of their peers. And that is an attractive thing about Gefen Technologies right now, and one of the reasons why I do want to do a little bit more research on this company. Though Gefen Technologies has only been listed on the ASX for about or just over 2 months, and when we do look at the chart during that 2-month period, nothing too exciting here. In fact, the share price has been drifting very slowly down, so the share price is lower from when it did IPO. Now, trading over the past 4 trading days has been really interesting because on September 30th, the share price of Gefen rose 33% in one day on a little bit higher volume. I did take interest in Gefen on that day. However, over the next 3 trading days, the share price has pulled back quite a bit. In fact, on the 1st of October, share price fell 8.6%, and then on the 5th of October, the share price has fallen another 12%. So the share price has fallen from 88 cents back to 68 cents. So a little bit of volatility in Gefen Technologies over the past few days. Maybe there has been some profit taking. Potentially some of the shareholders who had bought in over the past 2 months saw the share price rise 33% on the 30th of September and found the opportunity to sell out of Gefen Technologies on that rise, and that's why the share price has pulled back. Now, this is giving me a possibility entry point. If the share price stays above 65 cents, I would be possibly keen on taking a small position in this company. However, I would like to do a little bit more research on this company because I do think there could be possible value, and this is exactly what I did with Big Tin Can just after they IPO'd on the ASX. I took a small position because I did think they were undervalued at that point in time, and the share price has risen something like 5 to 6 times since then. I'm not sure if I talked about the reasons why I didn't do a standalone video for Gefen. It was all about they have only been listed on the ASX for 2 months, and I don't think that quite justifies a standalone video. I would prefer some sort of financial history before I take that next step. A little bit different for the agency group. We do have a financial history for this company because they have been listed on the ASX since December 2007. This company is all about giving real estate services, ticker code AU1. There are some interesting things about the agency group, and the first interesting thing is the valuation. Currently, at a share price of 5.2 cents, the market cap of the agency group is 22 million. They do have net debt of about 2.5 million, which means the enterprise value is 25 million. That does seem to be on the low side because they do have receipts for the financial year of 73 million, and they were operational cash flow positive for the financial year by 2.4 million. And if we break it down into the June quarter, they were operational cash flow positive for that quarter by $1.5 million and received $21.2 million of receipts. And receipts have been growing consistently over the past few years. We'll look at their cash receipts history in the next slide. But if they can maintain these sort of results moving forward, there is possible real good value for the agency group right now. The main reason I decided not to do a standalone video for the agency group is I'm not sure exactly what their real estate services is actually providing. Now, it seems like it is successful because $73.3 million of receipts, but the margins might be or are quite low because even though they do have quite high receipts, $73 million of receipts, they are barely operational cash flow positive. So I'd like to know a little bit more about this company before I decided to do a standalone video. But let's have a look at their cash receipts history, and this company even looks more interesting when we see that. As we turn our attention to the receipts history for the agency group, going back to the December quarter 2016, this is exactly what you want to see for an investable company. Receipts growing through time. And when I look at a more mature company, a company that doesn't issue Appendix 4Cs or 5Bs, I'll look at revenue, and I always want to see revenue growing through time. And you can't say anything negative about the agency group when you look at their receipts history going back to December quarter 2016. In that quarter, they had receipts of $540,000, and receipts have grown from that $540,000 to current quarterly receipts of $21.2 million. It has been on occasion a quarter where receipts have pulled back. We saw that in the June quarter 2020. Receipts fell from $15 million to $12.6 million. However, receipts have rebounded really well from that low of $12.6 million. In fact, they've increased almost $9 million in the last 4 quarters. So nothing negative to talk about when we look at the receipts history for the agency group. And that's one reason I have become a little bit more interested in this company and why I want to do a little bit more research before I do a standalone video for this company. Now let's look at the chart and see if the market has become interested in this company over the past few years. And the answer to that would be mostly no. This is the daily chart for the agency group going back almost 2 years ago, but the end of 2019. We did see the share price get to a low of 2.8 cents, not during the COVID-19 financial panic, but during August, September of last year, just after they released that June quarter 2020 when receipts did fall, and the share price fell to 2.8 cents. Share price did rebound over the next few months. In fact, we'll say the next 6 months. In fact, the share price rose from 2.8 cents to a high of 9 cents in April of this year. But the share price has been floundering ever since then. No discernible uptrend in the share price. So nothing to get too excited when you look at the share price movements over the past 9 months. The one positive thing I could possibly say about the agency group is there has been a slight increase in volume over the past 9 months, particularly since the start of this year. So we have seen a couple of spikes in volumes, which shows me there has been some large buying in this company on particular days, but no discernible massive increase in volume that aligns with a share price moving into an uptrend. That's what I want to see with the agency group, is a new uptrend developing, a breakout in the share price, and that's coinciding with a volume spike. And that would tell me that there is an interest in the market around this company. And if it's aligning with a positive financial report, that would be the sort of the all-encompassing motive to take a position in this company. Final company I want to talk about in this video is Duxton Broadacre Farms. If you do want financial exposure to Australian farms, potentially this is the company for you. Duxton Broadacre Farms owns 8 properties in the Forbes to West Wyalong area of New South Wales, so not really geographically diverse, but they do own 22,000 hectares composed of dry land and irrigated land, producing a diverse range of summer and winter crops, including wheat, barley, cotton. They also have livestock, so they also produce wool. Ticker code for this company is DBF. They listed on the ASX February 2018, so they've been on the exchange for 3.5 years. The market cap for this company is $72 million at $1.57. And when you look at the financial state of Duxton Broadacre Farms, there is some interesting aspects right here. Cash receipts for the financial year 21, $23.3 million. And they were operational cash flow positive by $4 million. And if we break that down into the June quarter, they are operational cash flow positive for that quarter by $2.5 million. They started the quarter with negative $4.7 million of cash. I'm not sure how you start with negative cash, but they finished with $3.6 million of cash because they made some investments, sold some investments, and that totaled to $7.4 million extra into their bank accounts. They repaid $1.8 million of loans and currently have $30.7 million of debt. So the enterprise value would be significantly higher than $72 million. So it would actually be approaching $100 million right now. So that's a true value of Duxton Broadacre Farms, not $72 million, which is their market cap. So you do have to take into account the amount of debt they have currently. When we look at the receipts history for Duxton Farms, I'm not sure if there's any seasonality here, but it is quite lumpy, very different from the agency group, which was almost going in a straight line up. The trend is up for Duxton, and in fact, their June quarter results was their record quarter with $9.9 million of receipts. But we can see on occasion where we have quarters producing only about $2 million of receipts. The last one of that was September quarter of last year. I am interested to see what happens with September quarter of this year. If you do have a read of their activities report, they do go through a lot of the factors that do influence how successful this company is. And included in that is the weather. Now, one of the reasons I don't like investing in agricultural companies is a lot of the factors that does affect the success of agricultural companies is things that they have no control over, including weather. Last thing I want to talk about in this video is the chart for Duxton Broadacre Farm since they listed on the ASX. This is a weekly chart, and when they did list on the ASX, they were about $1.60 or so. And then the share price fell from the time they listed all the way to a low of 95 cents during the COVID-19 financial panic. But the share price has recovered quite valiantly since then. In fact, the share price has increased about 50% over the past 18 months. And the share price has moved into a weekly uptrend. And I do like to see a company in a weekly uptrend. And another positive thing, the share price is moving towards an all-time high, just shy of that right now. In fact, the share price was almost at an all-time high a couple of weeks ago at $1.70. If the share price can move above $1.70, I would actually be a little bit more bullish moving forward. Some investors don't like to buy into companies when they are at an all-time high for some reason. I'm not sure why. But the way I look at it is if a company's share price is at an all-time high, there has been no shareholders who have bought into that company at a higher price in the past, which means there's no resistance moving forward, which means there's nothing holding back the share price of that company moving upwards and onwards from there on in. So a lot of positive things with Duxton's share price looking at the chart right now. That is all I have for this June quarter report video for the Duxton Broadacre Farms, the agency group, and Gefen Technologies. If you are interested in any of these companies, leave your comments, your thoughts, your questions in the comment section of this video, particularly if you know a little bit more than I do. I'd love to hear your thoughts on these companies and why you're either bullish, you're bearish, or you're neutral. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Talk to you later. Bye.